And now for our Money Rundown. Our Money Rundown segment is where we cover the recent news. There's a lot of media sources out there that are going to help give you updated information about the economy and the markets. Our job is to help summarize and synthesize, help pick out a few stories that are most important to you as a retiree or an investor. Joining us today, financial advisor, certified financial planner, Stephen Murphy. Welcome, Stephen.
Thanks, Scott. Glad to be here. All right, let's dive in. Our first story is conflict in the Middle East. U.S. airstrikes in Yemen and shipping issues in the Red Sea are causing many to wonder, are we on the verge of an escalation? Shipping container rates have soared as high as $10,000 amidst the conflicts. So it begs the question, will this contribute to another wave of inflation?
Thanks, Stephen. As we just talked about, I think inflation is the big thing to continue to watch into 2024. It's going to help guide the Fed in how aggressively they start to cut interest rates. And I do think that energy price disruptions could have a part to play in the inflationary concern. I think some of the good news is we've seen some slowing of container shipping rates coming from China. So it's a little too early to tell, in my opinion, about how this is going to impact the economy. I think the good news is we have not seen a dramatic rise in the cost of energy. In fact, we've seen the price of oil come down. So while container rates have been higher in the short run, I think the U.S. has taken some action to try to alleviate that. And it's going to be in everyone's interest coming into an election year to try to make sure that inflation stays at a reasonable rate. So that's something to continue to watch and to monitor. I'm not super concerned.
Our second headline, potential for a government shutdown looms. It seems possible that the continuing resolution will keep the government funded until March. Should a potential government shutdown occur, should it be concerning for investors?
Thanks, Stephen. I was thinking there might be a government shutdown early in the year in January, but it's looking more and more likely that they're going to pass a bill to continuing resolution to fund the government till at least March. In an election year, I would anticipate there might be some politics played around a government shutdown. So we'll have to see if that happens. In the past, government shutdowns have not been a big driver in the markets. There's been some volatility. The bigger driver was the question of whether we were going to default on U.S. government debt. That was a much bigger driver. The U.S.'s credit rating, having that AAA rating with the rating agencies, I think was more relevant. So we'll have to see how it impacts the economy. Maybe it reduces GDP just slightly if some of those government workers have to stay home. I know it impacts some people's planning to go to national parks and things like that. So we'll see. It's a pretty big risk that it's going to happen, but it typically hasn't been a big concern for the markets. I think more concerning is going to be inflation than I am concerned about government shutdown.
And our third headline, rate cuts are coming, but how many? The Federal Reserve has made it clear that they do intend to cut rates in 2024. Their forecast is for 3, while Wall Street is forecasting 6. So who is right, and why should investors care?
Thanks, Stephen. I think this is a big issue to keep your eye on. Whenever there's a disconnect from what Wall Street is expecting to have happen with what actually happens, it can cause some volatility in the markets. And like one of the analysts that we track very closely, one of the most bullish on Wall Street, thinks most of your gains are going to come in the second half of the year. I think you've got some concerns here in the first half, and one of them being a disconnect between these expectations and what actually happens. So I think 6 is a little too optimistic. I'd be closer to 3, I think, in where the Fed's going to be with cutting rates. But you never know. We are in an election year. There's going to be a lot of pressure for them to be cutting interest rates. But I think they're going to be really data dependent on where inflation is. And I'm hopeful that inflation is getting reined in a little bit. So hopefully we'll see more rates ahead this year. If you're seeing rate cuts and we're not in a recession, it's good for the markets and it's good for the economy. But there definitely could be some market volatility around a disconnect between what Wall Street's expecting, what actually happens.